Video we are going to look at how we analyze the revenue and the statistics. So it is a sample example of a typical P&L, which is normally giving you the statistics and operating performance for room division, for F&B division, for the miscellaneous. Here we are comparing the actual results compared to the budget and compared to the previous year, and then we have calculated the variances. So here you can do the variance analysis in terms of the horizontal analysis, like in this case, the food and revenue department, room department revenue is higher than the budget by 86%, food and beverage by 88%, other departments by 41%. So if we look at that in terms of ratios or in terms of the parallel increase, other operating departments are not able to show as much as increase as it should have been showing, because of the other room department revenue is higher. The number of occupied rooms is higher. The F&B department is seems to be okay, but when we do the vertical analysis also, it seems to be not really a problem. However, the other operating departments are showing a lesser contribution. So this is one way. And then ratio analysis means, if we want to understand how the 101,000 extra from the rooms division is coming out, so you can look at the occupancy ratios. So occupancy has increased from 31 to 63%. The rate, however, has dropped 41 to 38. So which might be caused by the aggressive marketing strategies, or selling the rate for a lower, but trying to get the volume for a lower rate. So rev bar, however, has increased significantly here, so which has shown that it's a good performance. Now, to understand this in more detail, there are certain reports that we should be looking for. For example, we should be looking for a segment report, which will tell us the revenue for each particular segment. An example of segmentation report can be look at this. This is not related to the same data, so the numbers will not match. However, this is just to explain you the segmentations. So here we are comparing the segmentations. We can compare segmentation in terms of room nights. We can compare the revenue for the ADR, or for the revenue as well. So the segmentation will help us which segment is going higher, which segment is going lower, which one is as per our target, which one is lower than our target. You can depict them in terms of graph, in terms of the segmentation contribution for each segment. So there are many ways of looking at it graphically, or by table. Other than that, we can look at the nationality report for each segment. We can look at where the guests are coming from which country they were coming earlier, which country they are coming now, which country we actually targeted in our marketing budget, and how they have been performing. So where the budgets are coming now, where the guests are coming from, how they are booking the guests. If let's say the revenue is lower than the budget or lower than the previous year, so we can go into these details reports. Then you have another report which is called booking pace and the sources. So this report will also tell you how the booking has been done in the hotel, how fast the guests are booking traditionally. So a sample of this report can be seen as here. For each segment, particularly, how many percent of the guests are booking in 0 to 7 days, how many guests are booking in 8 to 14 days, 15 to 30 days, more than 30 days. So here, as you can see in this particular hotel, a sample of the data, the most of the bookings are coming short lead, 0 to within 15 days they are getting almost 50% of the business. So means the business is very short term. You can definitely target these type of businesses or this type of segmentation by doing a very short term promotion. For you can This report will also tell you when to start the promotion for certain different market segments. Every market segment has a different needs for their marketing. So you can analyze that report as well, traditionally, and compared to your target. Then you have to also look at the future outlook, because profit and loss statement is always giving you the past figure, but what lies in the future. So these all reports, we should also be looking at what is the future outlook, how the booking pace is happening for the next 3 months, next 6 months, rather than only looking backwards. Because when we are analyzing the profit and loss statement, or especially particularly the revenue, we are not only focusing on the past, we are always looking on the future pace of the booking. In the past, maybe it has been a strong month, but it doesn't mean that the next 3 months are also strong. Or if the past has been lackluster, it doesn't mean that the future is also like. So your marketing decisions, your operating decisions, your decision to update the prices or other strategies depends on how is the future outlook from the hotel. So that is one way to look at the marketing analysis. Let us look at now some other other departments. So this have we have looked at the rooms division, but however, rooms division is not the only business in the hotel. There are 30% other business coming from the food and beverage. So how we gonna analyze it? So we can analyze it to check what is the impact of low occupancy on the F&B business. So you may have the check the F&B revenue per occupied room. You may the F&B revenue usually in the standard hotel come via breakfast and dinner. So you can segment the F&B revenue for each meal period separately, so that you can understand where the how much is the occupancy of the seats in the hotel for the breakfast, for the lunch, for the dinner. What is the average spending of the hotel of the guests in the breakfast, in the lunch, in the dinner? Usually, breakfast is nowadays included in the guest room, so guests are not spending on the breakfast except when they are combining the room rate. But some hotels are still selling the breakfast as an add-on, so they are giving a choice to the guest to buy the breakfast separate together or separate from the guest. In that case, you can also look at the capture ratio of the hotel guest into each meal period separately, so that we can understand, are we capitalizing on the market which is already available in the hotel. So you can do cover analysis for each meal period. So for cover analysis, what you need, and cover analysis, you need to look at each meal period separately, in-house covers, outside covers for each restaurant if you have multiple restaurants. And then also you can look at the menu engineering reports from each restaurant separately, so to understand which dish are getting more popular, what is not popular, and what is profitable and what is more less profitable. An example of the cover analysis report is given here, so you can check the in-house guest for breakfast, for lunch, for dinner, and outside guests in terms of revenue and average check as well. Usually you can also look at separately for food and beverage separately, but first we need to look at the total revenue. If there is some problem, then we go into the food and beverage separately. Once we identify the problem, then we can go back into the menu engineering report for that particular meal period to understand what is selling, what is not selling, or what are the problems in there. Our focus is on the total revenue management. So total revenue management will come can come from higher volume or higher value. So usually the hotels are struggling to strike a balance between the value or the volume. Higher ADR, so we should focus on higher ADR, higher average check, or higher occupancy and higher covers. Both have some of their advantages and disadvantages. Following the volume will increase your cost of operations, but will give you a lot of turnaround in the business and a lot of chances to upsell the other services. If you're selling the rooms for a lower rate, there is a high chance that the guest may be spending money on the food and the spa, on the other gift shop or other thing. You can also do a yield management, fill up the hotel up to a certain level, and then yield the higher category rooms by charging them a higher rate. You can also look at the value of the hotels, not selling to the lower categories or cheaper business segments. But in that case, your guests will be very limited in the hotel. So if you have a very big restaurant to support in the hotel, it may remain empty. Then in that case, you need to focus on outside guests, which is not a very easy task. Nowadays, the guests are not really willing to spend money in the hotel unless it's a very specific concept, and there's not many options available in the market. In developed markets, there are a lot of freestanding restaurants which are giving a very tough competition to the hotels. Overall spending in the hotel is more important than the achieved room rate. So now we are not looking at the room rates. We are looking at folio revenue. What is the total revenue, total money being spent by the guest in not only in the rooms but also in the F&B, also in the spa. So higher room rates does not guarantee there's no that there will be a higher total revenue in the hotels. So the guests who are coming for a very high price may go somewhere else for spa and food and beverage. But the person who is coming for at a lower rate may spend in the spa and also on the food and beverage. So what we need to look at is each segment, each guest profile separately, how they have been spending in the hotel, what are their spending habits, so that we can make a decision which guest to take and which guest not to take. So this is called total revenue management. And so we have to select the guests based on their total spending rather than on their individual room rates. Group bookings and FIT bookings, FIT business is another concept which we are normally deciding in the total revenue management. So whether we should take group business or whether we should take FIT business. Group business will be able to give us higher revenue in overall. However, it may displace the FIT revenue, which may be coming, keep on coming, because groups normally are coming only once in a year or once in a while, rather than the FITs which are coming regularly to the hotel and supporting the hotel. So it depends on again on the displacement, what how much displacement we are doing in particular situations, and if we are able to inform the guests in advance or arrange the other alternative accommodations for them. So that are all the total revenue management decisions. We have a separate class on the total revenue management which you can check out in my profile.